Good day all, Anish from BlackBull Markets here. Behind me is the chart of the US dollar versus the Japanese yen. Of course, this week we saw a new Prime Minister-elect come in and take over Shinzo Abe, who had been a long-standing Japanese leader. Suga is the name, and PM Suga was the second in line to take over from Abe, who of course had health concerns, stepping down. Suga coming in, so an expected change. What that means is no real change in policy for Japan, and now the focus turns to how they will deal with the recovery phase from the pandemic, which has hit the country extremely hard. The first country, of course, to enter an official recession, or over 30% contraction in GDP for the last quarter, with an expectation for that to not move much or recover at a faster pace like we're seeing in Europe or the US, due to the fact that COVID remains a pretty large phenomenon there. Businesses are still shut, and the country generally is riddled with a lot of debt. Even pre-COVID, the average debt to GDP was 250%. So again, that figure is set to increase. If you put it in perspective, the next one down the line is about 110%. And then, so 250% for a nation like Japan is pretty hefty. And what that represents is stagnation. Stagnation has been a key theme in Japan economics for the last few decades, and that's caused a lot of sideways movement in the currency, which previously sought after a safe haven. So when you're looking at a pair like dollar yen or pound yen, a lot of the movement comes from that base pair. So this dollar yen, a lot of this represents the chart of the dollar index. If you pulled up the dollar index against the dollar yen, you'll see strong correlations between the two. So how is Suga going to enlight growth or excite investment into Japan? Of course, we saw a UK trade deal with Japan, which could help strengthen the Japanese yen potentially. But again, will the Japanese yen need to weaken before it becomes attractive, or will this current rate stay the same? As you can see on the chart, we've really been operating at this between the 105 to 110 zone since 2016, a very tight range, and it's formed a nice little triangle pattern perhaps, or a range bound market between this area here, very tight consolidation zone for the last 4 years. That starts at the 116s, and you're moving right down across to the 105s. So that is the range that the yen has been operating in versus the dollar, of course. So what we're looking at now is a potential break either to the downside or the upside. The downside does look like a more likely case as investors come back into the yen, a safe haven, secondary currency asset, perhaps as we see also US stocks tick up, Japanese market stocks also tick up, which possibly could bring in more FX transfers into the Japanese yen amid a new leadership change as well. So if we look at the downside scenario, if we do get a break from this tight range where we're seeing, this is a monthly chart by the way, very sideways looking, consolidating, small body candles indicating a possible move. We saw a few months ago this big wick to the downside here where we crossed below 100, and within the same month we went up to 112. So this pair has the likelihood to have big volatile moves in a monthly period, and that could happen again. So really we're looking at that space at 100 as your key target to the downside. So if you're looking at it right now, you're looking at possible shorts, potentially the 100, magical 100 mark could be your target. Anything below that 100 mark, and then you're coming into a nice support area from 2013 where that operated between 98 to 100 again. So it's the downside play, and that also is reliance on a lot of dollar weakness from of course the presidency election this year. And if US stocks do continue higher, we could see some further outflows in the US dollar, as we're seeing the trend, of course, for 2020, the de-dollarization, low interest rates. The yen's obviously not offering much more than the Federal Reserve, but again, could be a nice trade to play for a dollar short. Now, if we do break to the upside, we're looking for any real move above that, those 106s, 107s, and then leading up to the 109 level where we saw a high 3 months ago. So again, we're looking at a potential play to the downside here, considering the declining strength of the dollar to continue and the yen to strengthen amid some sort of hope of positive outcomes from the UK trade deal with Japan, a rising stock market and a rising Japanese yen for a safe haven place. So let's see if Suga can turn it around, break out of this long time consolidation, stagnation zone for Japanese economics and really bring a new part to a new decade, 2020s of course, in Japan. So all the best of luck with your trading. Let's see if you can break out of this aging slow economy, bring it back to what we saw of a superpower of the 1980s, Japan. Let's see what's in store. All the best of luck with your trading.